It's week 2 in the shutdown. Rate cuts may still be in the near future, and buyers can take advantage of uncertainty to negotiate and secure concessions. Let's dive into the highlights today. The question on everyone's mind: is the Fed still going to cut rates at the end of October? Turns out it's more than likely. The Fed is slated to meet October 28th and the 29th. Because they're independently funded, the shutdown doesn't affect their operations directly. They usually rely on government data like job reports, inflation numbers, but since that's off the table now, they're relying on private sector reports. Still, cutting rates too aggressively could create inflation. But if they don't cut rates and the job market gets worse, we could head into a recession. The majority of the Fed is more concerned about a weak job market than inflation at the moment. And as always, Fed rates don't directly determine mortgage rates, but the Fed's actions sometimes have a ripple effect. Mortgage rates are determined by the bond market, especially 10 and 30-year mortgage-backed security bonds, and economic expectations overall. Mortgage rates aren't changing very much and are still at a lower point for the year. Home buyers, now could be your opportunity. You may have a lot of negotiating power thanks to economic uncertainty. Thanks for tuning in to this week's Market Minute. Share this video to spread the word, and see you next week. God bless.